Welcome back. You're watching Market Fatafat on ET Now, a show where we are highlighting all the stocks that are buzzing in trade today. But before that, let me welcome on board onto the technical side Nirav Chheda of Nirmal Bang Securities. Hi, very good afternoon, Nirav. And let's talk about the first counter that you have picked for our viewers. That is Voltas, seeing no stopping and holding a gains of over 3% currently. And the results are also due in a couple of days. So how are the charts looking like for Voltas, and how much more upside do you believe this counter could show?
Good afternoon to everyone, and thank you for having me again. This stock has made a double bottom kind of a formation, and it hasn't done anything in the past couple of years. And from 1300, this stock came down even below the 800 level. But now it is taking steam. Good volumes have gone in. Also, a lot of short covering action seen. So I believe this stock can now move up quite considerably from current levels, and it can go up towards that 950, 970 odd levels. So look to buy the stock at current levels. 810 should be your stop loss.
Okay, keeping an eye out on Voltas and those levels over there. But let's move on and talk about Tata Chem. Today, Tata Chem is falling in trade. Why is that so? What we've seen coming in is HSBC has actually cut the target price for Tata Chemicals to 1,100 rupees per share from previous 1,150 rupees per share, though they're retaining their buy rating. Now, they're furthermore saying that they've cut their FY24, FY25 earnings estimate by 4 to 6%, as they are incorporating that Q1 results, which were lower in terms of the sales volumes, assumptions as well. So yes, that was a bit of a miss for them over there overall. That's why the target price is factoring in now the earnings cut that they are giving as well, and that is the reason that they've actually reduced the target price as well. This year, downside risk that could furthermore come in, which is faster than expected in terms of the ramp up in China capacities as well, and a slow pickup in the demand and sharp declines in soda ash prices are factors that could be a bit of a downside risk for Tata Chemicals, and that is why the cut in the target price by HSBC.
Okay, moving on, and let's talk about Adani Wilmar. That's the counter is in focus, which is now at a 2-month low, and that's on the reports that Adani Enterprises is weighing to exit Adani Wilmar, and that's why we are seeing the stock following, because you remember that Adani Enterprise as a whole, the group is actually offloading some of their stakes in some of their non-core businesses, and that could happen in Adani Wilmar as well. So that is something that we are watching out for, but definitely on the back of this report, the stock is down about 3.5%.
On Adani Wilmar, but let's also move on and talk about Piramal Enterprises. And Nirav, Piramal Enterprises on the charts, what is it looking like? Last 6 months, we've seen almost a 16% return. Should we expect a sharper run up now?
Yeah, I believe this stock has done not anything, not much in the last few months. This stock came down from 1600 odd levels, and it came down even below the 800 levels. But in the last couple of months, we have seen a good bounce back, no doubt. But it has still not reached its peak, and it can very well reach towards those levels of 1450, 1500 odd levels. So still a long way to go. So from a near-term perspective and from a medium-term perspective, it's a good buy. Plus the volumes have increased. Also, there are a couple of breakouts. The most important being a channel breakout above that 850 odd levels. So I believe this stock can be bought at current levels. You can keep a stop loss of 1010. Your near-term target should be around 1100, and your medium-term target would be around 1400.
Okay, moving on, and let's focus to Gland Pharma. Then post the earnings, we have seen a 20% circuit in this particular counter, and today as well the stock is buzzing. Lisa, tell us what's happening in Gland Pharma.
Yes, so Gland Pharma, they extended the gains since yesterday too. The stock was up around 10% in early morning trade. So total we saw around 30% coming in for Gland Pharma in the last 2 sessions. That was on the back of a good set of numbers. 41% increase in revenue was seen, and that was the brokerages we saw upgrades coming in from brokerages because they believe that it is a sign an early sign of revival in their base business. Talking about Jefferies, they feel that the improving pricing environment in the US, the momentum in the new launches, as well as the roadmap for turnaround on their recent acquisition, that is Cenexi, that indicates that the worst is over for Gland Pharma. Even Bernstein, they retained their outperform call on Gland Pharma with a price target of around 1,742 per share. Jefferies was even more bullish on the stock as they upgraded it to buy while raising their target price for the stock by around 54% to 1,640. Jefferies has increased their FY 25-26 earning EPS estimates by around 5 to 7%, and even Motilal Oswal, they also raised their earnings estimates by 8.5% and 5% respectively for FY 24 as well as 25. So that is why we can see Gland Pharma surging in trade in today's session.
Okay, let's move on and mark the flashes that are coming in on your screen, and that is Safari Industries. The numbers have come out. Look at how strong the numbers have come in. We're seeing the revenue almost coming in at 426 crores versus just 293 crores last year. So sharp jump in terms of the revenues of the company. The profit of the company has almost doubled as well, 50 crores versus 26 crores last year. And operating performance of the company has been very strong as well. When you look at the EBITDA, 79 crores versus 42 crores last year. And margins also have seen an improvement coming in at 18.5% versus 14.2%. So yes, almost a 350 to 400 basis point expansion in terms of the EBITDA margins of the company, strong growth in terms of the revenues of the company. So good performance that has come in from Safari Industries. And yes, keeping an eye out on this one because it seems like everyone has started moving out. So everyone is going and shopping for luggages and traveling around now. So that also does support the company's growth. And yes, 7.7% uptick as of now. Look at the sharp spike in the stock as well. But that is Safari Industries for you all. Let's move on and talk about the next stock, and that is also related to traveling, and that is hotels, Vamakshi. Why have you picked out hotels today? What is the news flow here that we are seeing?
Well, Vinny, hotel stocks are in focus on the back of a brokerage, and as you rightly pointed out, quite a buzz in trading session today. As of now, Chalet is up nearly 4.5%. Lemon Tree is also seeing gains of 1%, but Indian Hotels is down nearly 0.6%. Let's understand this with the brokerage that has come in from Investec. Now, Investec has initiated coverage on Chalet as well as Lemon Tree with a buy call, while they've initiated coverage on Indian Hotels with a hold rating. Now, they believe that the entire hotel industry is highly underpenetrated, and this in fact provides ample growth opportunities for all of these hotel counters. They believe that the margins are expected to stabilize at the current levels, and in fact they have initiated a buy call on Lemon Tree as well as Chalet because they have a robust pipeline, they have sustainable cost reduction as well as an improvement in the industry dynamics. As far as Indian Hotels is concerned, they have a hold rating because the valuation looks slightly stretched in this counter. So all in all, on the back of that, we have hotel stocks in focus today.
Okay, moving on, and let's shift focus to Chola Finance then, and Nirav, this particular counter has seen to be drifting lower day by day, and especially post the earnings. Tell us how the chart's looking like for this one.
Yeah, so Chola Finance, looking at the overall chart, it is negative, as you said it. Important thing is the 50-day moving average has been broken, and on the daily chart, higher top, higher bottom formation which was in place, that has been broken. So this stock has gone down below both. 1080 was an important support level which has been broken now. So this stock can go down further. It can come down towards that 950 to about 970 odd level. So look to sell this stock at current levels. Once you get it lower around that, the levels that I told you, that is where you buy again.
Okay, let's move on and then talk about Mishra Dhatu. Why is this one in focus? Mishra Dhatu has come out with its numbers. When you look at it, yes, revenue has seen an uptick on a year-on-year basis. Profits have seen a 5% uptick. Revenues were up by around 64%. But when you look at it in terms of the margins of the company, that has seen a contraction, and that has come in at 22% versus 29% last year. Now, obviously, when you look at it, the higher input cost is something that has dented the operating margins of the company. That surge in input costs as well as employee costs, employee benefit expenses is something that is denting the profitability of the company, and that is why the profits also up to just 5%, and the EBITDA margins also you're seeing a contraction coming in terms of the EBITDA margins of the company, 22% versus 29%, and that's the main reason that we're seeing the stock is also trading with a decline of almost 5% as of now, Shrishti.
Okay, moving on, and let's shift focus then to Inox Wind. The Inox Wind Energy has hit a record high on the back of the stake sale, and shares of the Inox Wind Energy were as much as up by 7%, wherein the wind energy company hits the sharpest intraday gain on track of the second consecutive session of the gains, if that trends to hold on, where the company says that it has sold 14.6 million shares of the unit of Inox Wind Limited, aggregating to around to 305 crore rupees via a block deal, and that's why we are seeing this particular counter that's buzzing in trade today, but still holding a gains of around 0.4%.
Okay, let's keep an eye out on Inox Wind. Moving on to a pharma name, and Nirav, Natco Pharma is the one you've picked out from the pharma pack, which is flying high in trade and buzzing away in trade every day. How interesting is Natco Pharma looking? Because right now when I'm looking at the chart on the screen, 69-70% return in last 6 months is good, and always that gradual momentum has continued for Natco Pharma. Now what is the view?
Yeah, so the chart is very beautiful, and that's why I picked this one. It's a rounding formation. In the last couple of years it did nothing, but last 3-4 months the stock is actually blasted, and it has come up, even though it has come up about 50-60% from the lows. I believe it still has the legs to go up towards that 1100-1200 odd level. So you can look to buy the stock even at current levels. There's a breakout which has come in at this stock at around 850 odd levels, which is a big breakout, and this stock can move up aggressively from current levels. Look to buy it at current levels, and then on some decline, 850 should be your stop loss. It can come up towards that 1100-1150 level.
Okay, let's move on, and Lisa, Ircon is the next stock that you're going to talk to us about. Why is this one in focus? What's the news flow here?
Well, the stock surged as much as 10% in early morning trade to touch a record high of around 110 per share, and this is on the back of good set of numbers. The PAT saw a 30% year-on-year growth and stood at 187 crore. Revenue jumped 35.7% and stood at 2,712 crore. Well, Ircon International, they said that it achieved the highest turnover in Q1 FY24. Even the order book is quite strong and stood at 32,486 crore, out of which major share that belongs to the railway segment. Well, the stock is on fire since the last 1 year. Also on YTD basis, it has jumped around 80% and it has rallied more than 170%, and that is because of the traction going on in the rail segment, rail infra segment. And even recently, the Railway Ministry, they gave an in-principle nod for the closure of the JV company. This is for BRPL, where Ircon's stake in BRPL, that is around 26%. So that's Ircon. It's trading up and above in today's session on the back of good set of numbers.
Absolutely, Lisa. Let's just mark the SIP data that has come in from the Amphi data. We're seeing SIPs have actually come in at a record high level, all-time high levels over there. 15,245 crores is what the SIP data is standing at. So interesting number coming in over there as well. Shrishti, keeping an eye out on that one today. And when you look at it in terms of other data, also we're seeing overall flows also at the highest in 3 months. Equity inflows have also remained at rupees 7.5 lakh crores. And that is for the second straight month as well. So interesting data coming in over there, Shrishti.
Well, yes, absolutely. SIP number hitting at 15,245 rupees, and that's the update. But let's move on, and once again, let's get back to the stocks that are in focus. And Nirav, coming to you to talk about Ganesh Benzo. This counter we don't discuss much often, but tell us how the chart's looking like for this one and how should one trade on?
So you are right when you say this stock is not discussed much. Actually, it is not, but it got a good business, and the chart is very beautiful. A higher top, higher bottom formation, and slowly but steadily this stock is moving up. I believe there's a near-term breakout in this stock above that 165 odd levels. This stock can move up towards that 200 to 20 odd level. So look to buy this stock for that target. You can keep a stop loss of around 160 for your long.
Okay, let's move on to the next one, and Brigade Enterprises, Vamakshi. How are the numbers looking like for this one today? The stock is down and out in trade.
Well, yes, Vineet, the numbers are not looking so great for Brigade Enterprises. When we look at the revenue, that is seeing a downtick of almost 28%. EBITDA is also down 25%. Net profit is also seeing a sharp cut of almost 56%. Other than that, when we look at the margins, they have improved slightly, up 95 basis points from 25.8% to 26.7%. Largely, let's look at what the commentary is coming in from the brokerages, and brokerages are highlighting that there has been a healthy growth as far as pre-sales are concerned. In the residential business, they stand at 996 crores. Now, this is an uptick of almost 22% that has come in on a year-on-year basis, but definitely it is a sequential decline of 33% given that there was a very high base of pre-sales that was created last year. The company also noted improved occupancy for the leasing business. Occupancy stood at 84%, while for the hospitality segment, they did note a 31% year-on-year growth in the EBITDA, and they were the key highlights of the result. But let's look at some of the key negatives that came in. There were lower revenue recognition that was noted for the real estate residential business, with revenues of almost 370 odd crores. Yes, down nearly 43%, and as well as weaker margins were some of the key negatives, and that is the reason why here we have Brigade Enterprises really under pressure today.
Okay, moving on, and let's shift focus to SJS Craft then. And Nirav, tell us how the chart's looking like for this particular counter, because this also is seen to be buzzing in the recent past. In the past 6 months, just up around 11%. So how much more upside do you believe that's still pending?
So this stock has come down from 1,000 odd levels in 2021 to even below the 400 levels. Just a couple of weeks back, this stock has broken out now finally. After a long consolidation, some good volumes going in. So there is this breakout of a falling trend line, and this breakout has come in at around 465 odd levels. I believe this stock can move up now from current levels. Even for today, it is up about 4-5%, and this stock can go up towards the 650, 680 odd levels very aggressively and very soon. So look to buy the stock at current levels. You can keep a stop loss of around 480 for your long.
Okay, let's move on and talk about Siemens. And Lisa, why is Siemens in focus today? Is it also an earnings candidate, or are we seeing some other news for today for Siemens?
Yes, you're right, Vinny. It's on the back of earnings. So Siemens reported their earnings, and on year-on-year basis, the numbers were quite decent. The growth was decent. It was the revenue was up 14%. EBITDA also grew 33%. PAT was up around 44%. But on quarter-on-quarter basis, it saw a decline of 9% in their EBITDA. Revenue was kind of flat, and even the margin that stood at around 11% versus 12%, which was seen in the previous quarter. Segment-wise, the base business has increased by 10.9% on year-on-year basis. The margin for smart infra segment that grew around 300 bips, and even for energy segment that was up around 109 bips, 90 bips. Talking about their order inflow, they saw new orders which stood at around 5,288 crore, and it saw a muted growth of around 5% over last year. The management highlighted that the advance ordering in the short cycle product business that has got some adverse impacts, and they'll keep a watch on this. The commentary going forward, that looks quite decent, because they see strong performance across the segments and healthy mix of orders coming in. But the supply chain issue which impacted the margin, they say that that has started improving and volumes will start normalizing from then on. So that was on Siemens. It's down about 3% in today's trading session.
Okay, let's keep it. But let's go back to the AMFI data, because SIP data that is surely coming in at record levels, and obviously we're seeing overall flows are at the highest in 3 months as well. To talk more about that and make us understand more, we are joined by Anthony Heredia, who is from the Managing Director and CEO at Mahindra Manulife Investments and Management. Thank you so much, Anthony, for joining in with us. And my first question is going to be on that retail AUM. What is that looking like? Because SIP is coming in at a record high level. So do you think that this growth that we're seeing there, or the strong momentum that we're seeing there, that is likely to sustain going forward as well?
Yeah, hi, thanks for having me. I think it's not only going to sustain, I think it's going to actually grow further for 2 reasons. One, I think the more you have retail investors convinced with the performance that gets delivered by equity funds over the long term, means that you attract a new set of investors to the market. And secondly, the fact that markets are not really cheap. you would expect that investors would choose a gradual form of investing to kind of come into markets, and SIP is the perfect vehicle for that. So to my mind, I am not surprised by the 15,000 crore plus SIP number. In fact, I would be as bold as to predict that maybe not by the end of this year, but in 12 months from now, I wouldn't be surprised to see this number, more than 20,000 a month.
Okay, more than 20,000 a month SIP is something that Anthony is looking at. And Anthony, a very good afternoon. This is Shrishti joining in. But what we are seeing that in the past couple of months, a lot of participation has come into the small cap space. So going ahead, which funds basically do you believe that will have the most of the traction, and what will be your take onto the small and the mid-size segment of the market then?
So I don't think the traction on small caps being a large proportion of gross flows will change. And we've seen that in the past, right? I mean, the category that seems to have shown the best returns in the short term tends to attract the most flows, especially with small cap. There are periods of months where you don't see flows in small caps at all. And then you have periods where you see a outperformance. Having said that, what I think we as an industry are certainly doing is making sure investors who want to get into small cap are doing it with a long-term time frame. And I would personally definitely tell any investor that, don't fall in love only with small cap. I think diversification is key. Multi-cap funds, you would have seen from this month's AMFI data, seems to have seen decent inflows. And I think while we would expect traction in small caps to continue for another 3 or 4 months, I think that by that point, people will start looking more at multi-cap, multi-asset funds. I think the other thing that probably, hopefully will change is momentum towards large cap, because that's actually continued to see outflows for quite some time. And I don't expect that to change materially, but again, to summarize, I think small cap traction, I would clearly believe will continue at least till the end of this year. But I see a trend where people are no longer as fascinated and they're looking at other categories like multi-cap and flexi-cap.
Anthony, I'm going to touch upon one point, and because that was the point I was looking at as well. While small cap is seeing that increase in funds there, but large cap, like you were mentioning, that has seen, an outflow. This is for the third straight month. Again, we are seeing outflows even in focused as well as ELSS, flexi cap fund, equity schemes. That is also seeing an outflow in the last 3 straight months. Is that something of a concern in terms of a trend that we are seeing coming in? How should one be actually reading this?
So let me put it this way. I think if you look at the numbers, you'll see one statistic, which is gross flows, as you pointed out at the start of the program, are at a high for maybe the last 6 months, but redemption numbers are also at a high. Now, where will redemptions come from? They will come from categories that historically have had the most assets, and which is why I think you're seeing outflows from large cap and ELSS. Add into the mix the fact that in large cap, clearly the element of passives becoming a lot more popular with investors starts to come through. So I think that's something that explains the trajectory of net flows becoming negative in these categories. But I don't think it's a cause for worry. It's just a natural consequence of flows that keep moving from fund categories that have performed in the near term. I am very convinced that in 3 or 6 months, people will diversify more from small cap to multi-cap and flexi-cap. Large cap, like I said, it's difficult to read the data because we report for passives and ETFs as one aggregate category, but I think that is a shift that's also clearly happening, which I expect will be the trend for a few years to come.
Okay, thank you so much, Anthony, for joining us today on ET Now and helping with your take on how should one read the equity, the AMFI data this time around, and going ahead, what sort of inflow can we expect across the funds. But let's move on and get back to all the stocks that are buzzing. And Nirav, coming to you for the next counter, and you have picked up MRPL. Tell us, why is this counter is in focus, as in terms of the technicals, how the chart's looking like?
In this whole rally, we have seen a lot of rounding formations going on, and this is one of the one more stock where a rounding formation is going on, and it's key that this stock will move up slowly and steadily. I believe the pattern formation will take shape till 120 odd levels, which is where the breakout will come in. And once that breakout comes in, you will see very aggressive move on the upside. So slowly but steadily, this stock should move up towards that 120 level. It's still at 85, relatively priced. The technical chart is still positive. It can come up from 85 to about 100, 105 odd levels in the next couple of 4-5 days. And you can keep a stop loss of around 78 for your longs. So your short term target would be around 105 and your longer term target around 120.
Okay, keeping an eye out on short-term target of 105 and long-term target of 120. That's for MRPL. But Nirav, coming to you, I've picked out Adani Enterprises on the charts as well. What are you viewing in terms of here, the charts, and what is it indicating? Last 6 months, you've seen almost a 36% return coming in. What is now the indication for Adani Enterprises on the charts?
So this stock has witnessed a flat kind of a formation, and the breakout has come in at around 2480, and I believe even though there was a selling day yesterday, this stock should move up quite considerably. The option chain is very positive as well. So I believe this stock can probably reach its 200-day moving average, which is around the 2700 odd levels. So look to buy at current levels. You can keep a small stop loss of 2450 for your long, and at around 2700 book your profit.
700 is where you could look at booking your profits in Adani Enterprise. But with this, viewers, we're completely out of time in this edition of Market Fatafat. Thank you so much, Nirav, as well as Vamakshi and Lisa, for joining us today and helping all our viewers to highlight that which counters are buzzing. But with this, me and Winnie will also take your leave. But you don't go anywhere. Closing trades will take the action ahead.